Good morning, everyone, and welcome to this final webinar for Global Money Week. My name is Rihanna Badenhorst, and I am the Pro Bono Coordinator and responsible for consumer education at the Financial Planning Institute of Southern Africa. Today's session will be recorded, and if you have any questions, please feel free to post it in the chat. The Financial Planning Institute proudly supports Global Money Week 2025, an initiative by the Organization of Economic Cooperation and Development, or OECD in short. For over 12 years, the OECD has been running this initiative, benefiting millions of children across 176 countries globally. Our topic for today is breaking barriers, building trust with your financial planning professional. And we're honored to have Russell Ho with us today, who will lead this discussion. Russell is a certified financial planner and a member of the Young Financial Planners Organization, or YFPO, a community within the Financial Planning Institute. With a decade of experience in coaching clients to financial success, Russell and his dedicated team have been guiding and solving clients' money problems. He's passionate about financial education and thought leadership, frequently speaking at public events and appearing on various podcasts, including Propulsion, Next Gen Planners Podcast, and the Innovating Advice Show. Russell has also represented the South African financial advice profession at the Next Gen Global Financial Planning Conference in the UK. Thank you, Russell. We are looking forward to your presentation today.
Good morning, everyone. Thank you so much for giving up your precious time just before the long weekend to spend this morning with us in covering and breaking the barriers related to building trust with your financial professional. So what I'll do is I'll be going through a quick presentation and then we'll take questions at the end about some of the myths or barriers that a lot of us face when it comes to thinking about financial advice, financial planning, and most in all, a lot of I would say the challenges or barriers we hear of, not only through our families, but also from what we hear in society and media. I'll be sharing a quick presentation just to kind of give you guys some context, and then we'll invite to the floor any questions that you guys may have, and I'll be more than happy to answer them all. All right, so our presentation or our talk today is about breaking barriers, building trust with your financial planning professional. And I'm just going to show you the quick slides. All right, so breaking barriers, building trust with your financial planning professional. A few things that I found is that the reality of money in South Africa is more focused on your money and your reality. We have a diverse financial background, upbringings, and money beliefs in South Africa. And a lot of us, about 80% of South Africans, worry about their money daily. Debt is also a lifeline for many, but also a trap. And what I've been finding a lot within advising and coaching a lot of clients when it comes to their relationship with money is that financial stress is real. Money worries lead to anxiety, stress, family pressures to support relatives, and lack of financial literacy also leads to a lot of poor decisions. We have a lot of money beliefs that have been passed down from family, especially myself. I've even come from that experience of growing up with financial struggles. Talking about money is very taboo. And some of us generally think that wealth and financial advice is only for the rich. Sound familiar? So the biggest financial worry right now is like, what is stressing or what are you worried about now when it comes to your finances? Some of the myths that I've picked up that stop us from seeking advice or financial advice myths that I would like to bust for a lot of you as well is that financial planning is only for the wealthy. I get this a lot when I coach and advise clients. It's what helps you build wealth in the first place. Like the gym, you don't want to wait to be fit before you start. You start so you can get fit. So financial planning isn't only for the wealthy, it's for everyone. And I think that's one of the myths out there that a lot of people seem to, misunderstand or be misled, thinking I need to have R1 million or a couple millions in today's times in order to actually qualify to get financial advice. Another myth that I tend to find with a lot of clients and consumers nowadays is that I don't earn enough to need a financial plan. And that's completely wrong. Even the small amounts invested and building small habits over time consistently grow. And to be honest, with a lot of my experience with advising and coaching clients, it's the small things that matter. If we can't review and look at like what are the small habits that are creating, your current financial situation and addressing those, then it's not going to solve the issue in the long term. So I always say that start small and also look at the habits that you have and see how can I improve those habits. And then the next myth that I find is that, especially with technology now, in today's times, TikTok, social media, Instagram, all those things, ChatGPT, a lot of us think also that we can manage our money alone and that Google has all the answers. Or today, ChatGPT has all the answers. But what we don't realize, and I find this a lot, is that we also have blind spots that a financial planning professional can see and can help us avoid costly mistakes. Personally, from my personal experience and also professional experience when helping with clients, I would say the biggest advantage that clients get that can't be replicated by technology or robo-advice or ChatGPT is having someone there to be your soundboard when it comes to your thoughts, worries, and ideas when it comes to your finances. And kind of having that person or that go-to person of like, what do you think? Do you think this is a good idea? Am I making the right decision or choice? Because sometimes, and it's part of human nature, we get so focused on our train of thought that we can't see any blind spots or shortfalls or even ask like, what can go wrong here? Another myth that I find is that sometimes we also think that debt consolidation will solve my money problems, and especially in a country like South Africa where we have a high debt ratio, this might seem as a solution in the short term, but it won't solve your long-term problems. Plus, what if you're only addressing the symptom, not the cause, which is a common analogy I like to use with clients. It's like, before jumping to the initial solution or recommendation, actually think, what is the problem? Is it actually, is the solution to solve the problem actually going to be more debt? Or am I not addressing a poor, bad habit or poor behavior that I need to actually relook at? Because if I can't solve and address that cause, it's not going to actually help me in the long term. I will still have the same symptoms in the future. So which of these myths have you heard or believed yourself at some point? The next thing that I want to cover is also, I find that when it comes to breaking barriers, the next barrier I find is that what financial planning really is, versus what people think financial planning is, and what is real financial planning. Real financial planning actually equals real life solutions. So as Rihanna mentioned, I've been in the industry for about a decade now. So I've had my fair share of also seeing what are the bad ups and downs or the bad and good about the financial advice profession. And I'll be honest, like we've come a long way. There's a lot of bad advice in the form of more product pushing than actual advice that I find that's given to consumers and clients out there. Unfortunately, a lot of people generally have bad experiences when it comes to advisors because they've probably dealt with more policy salesmen than actually advice givers. So when it comes to real financial plan and real advice, especially with how we work with a lot of our clients, it's not just about the products or the numbers. It's about you, your goals, and the life you want to live. Real financial planning is also not a do once event, but an ongoing journey. So your finances change as your life changes, whether it be marriage, new job, starting work, working overseas, buying a house, buying a car. We have all these life phases in our life that actually is connected to our finances without us realizing it. And that's why financial planning is an ongoing journey. It's not a once-off event. I also do, advocate that I would say proper financial advice and planning is when you actually get understood for what type of life you want to build, what actually are your true needs, your behaviors and habits, and what relationship do you want to have with money before jumping towards financial products or investments. We always advocate for the notion of like, if a financial planner can't understand you as a person and not see the numbers or how much you earn or how much you're worth, they actually have no right to ask you or talk to you about products whatsoever. When it comes to real financial planning, it's about clarity and not confusion, helping you see where your money goes with purpose instead of feeling overwhelmed, and you feel in control and confident when it comes to your money. An example of this that we've done, or we kind of encourage amongst clients and also consumers is, for example, a boring task that people experience is like doing a budget, rather phrase it as doing a cash flow management exercise. And it's not about seeing, oh, where my money is going as well, but kind of asking yourself, okay, wherever my money is going, is it going there with intent and purpose? And it's just there to give you awareness of like, is it in the right place, or is it actually not going towards the life that I want to build? So it's about also how you live and not just what you save. The way we also feel that a lot of people out there in South Africa don't see money is that money is a tool to help you balance enjoying your life, creating experiences while planning for your future self, and not feeling guilty about spending because you have a financial plan that allows for it. A common, I would say, misunderstanding or trait that I find that I've been coming across lately with a lot of clients the last couple of months is that, and it becomes very more personalized when it comes to your relationship with money, is that I find a lot of us, including myself, I was there at that age before, that we tend to, without realizing it, tick these boxes in our mind of what a financially responsible adult should be. So without even anyone asking us, like, what do we want at the end of the day? We go ahead and, based off feedback or advice or suggestions from family, friends, and also what we see on social media. We go and get all the life insurance, all the products, the retirement annuity, the investments. We also go and make all the right decisions, like, buy a car, buy a house. But none of that, no one actually addresses of like, okay, are you doing it for you? Or are you doing it actually to become or to be viewed as I'm financially responsible now as an adult in the eyes of my family, my friends, and also society? So that's another thing that I find why money is really personal and your relationship with money is really important. And also it affects your financial planning as well. So imagine if you addressed all of that and you didn't feel anxious, stressed, or worried when it comes to money, but more at ease, assured, and confident about your present and your future. Then, struggle of trusting a financial planner. Now, like I said, I've been in the profession for about a decade now. So I followed the traditional route. I studied financial planning. I did my honors and postgrad in financial planning with my majors in tax and, I would say behavioral finance. And what I found when I started in the profession, which is probably what a lot of us experience, is that there seems to be a lot of mis and trust issues when it comes to finding the right financial planning professional or what we perceive a financial advisor is. A lot of us tend to think that a financial advisor, planner is, some form of policy salesman. Oh, it's Uncle Tom that wants to sell me a life policy. And unfortunately, a lot of us have had that bad experience where we are sold products and we haven't dealt with real advice givers. A true financial planner that I will say, however, will always value understanding you as a client, as an individual first before jumping to recommendations. It should feel like coaching and therapy, guiding you to financial security and success. You should feel heard, and it should be like a safe space for you to talk about your relationship with finances. Another thing that I find related to this myth is that a lot of us tend to have fear of judgment. I always tell clients, and I always ask them like what they do for a living, and I always tell them like, look, there's no dumb or silly questions, and that's how it should feel when you speak to your financial planner because it's really personalized. But a lot of us feel growing up, especially when you're an adult now, you are really worried or embarrassed of like, oh, I have these worries or thoughts, but I'm worried that if I share them with this person, the stranger that I've just met, they're going to tell me I'm dumb and I'm doing everything wrong and I'm stupid. And then I'm going to actually feel more discouraged. So I think there's a lot of fear of judgment there. Whereas if you are dealing or you find yourself with a true financial planner, they make you feel reassured. It should be a safe space when you meet with them. And it allows you to speak openly about your worries and how you feel about your finances. If we as financial planners can't understand you first, how can we advise you holistically? And that's what it should feel like. Like I said earlier, ironically, it should feel like you are going to therapy, but therapy to empower you to transform your relationship when it comes to money. Another big thing I find that when it comes to the struggle of finding a trusted financial planner is transparency. So a lot of us don't ask, how much will it cost and what can I expect? A lot of us don't know what to expect when it comes to a financial advisor or planner. And shockingly enough, when I speak to clients as well, a lot of consumers don't know, and a lot of us don't know, okay, how do I pay an advisor? How much does it cost? And then we get stumped when we find all these hidden commissions and fees. So I always say to clients and consumers, like when you seek out proper advice, and there is great advice out there and proper planners that are there to take care of you, they will be more than welcome to explain how financial planners and advisors earn in general, how do they charge for their advice, and what can you expect working with them within the first 12 months of partnering with them so that you can make an informed decision. This is really important, I feel, especially if I was a client myself, because finances are very personal. I mean, we already spoke in the last slide where it's taboo and we feel embarrassed about like admitting if we've done some things wrong, and we're worried we're going to get judged on it. So when it comes to your finances, especially managing your plans going forward, it's really personalized. So it's really important that you find someone that you fit well with and that you also feel at ease and at peace and in a safe space when it comes to opening up about your finances. Just from my experience, and I've seen bad advisors and dealt with bad advisors as well and taken clients away from them. Not all financial planners are the same. And what I'm going to do in the next slide is I'm going to share how do I find this great advisor or this good advisor, Russell, that you're talking about. So in our next slide, with building trust with your financial advisor, it's like, okay, how do I find the right financial partner? You need to look for a certified professional, not a salesperson. So the right financial planner should focus on your financial well-being and not just selling products. They should ask a lot of open-ended questions to understand you as a person more and listen first and then recommend later. They're not focused on a quick fix, but a long-term solution. Out of my personal experience, what I would also recommend for any of you who are looking for proper advice and a proper planner is the Financial Plan Institute of South Africa, who has done a phenomenal job as an organization professionalizing our industry, especially in my experience from 10 years ago to what it is now. They even have a search tab underneath their FBI 123 Money, where you can search for a financial professional under there within your area. And these are all accredited planners. I would say this is a big thing now, especially within our profession. There's a lot of regulation and professionalism going involved, where we have to meet CPD, continuous professional development points, and we have to be credited. So they have access to all the accredited planners that are with them that follow strict ethics and code of conducts and have a high level of professionalism. I would also even take it a step further of once you've searched and you found a set of planners there, don't be afraid to also go and interview those planners. A lot of them offer a complimentary once-off consult where we term it as like a meet and greet to see if you're a good fit. And that's also an opportunity for you to ask questions to the planner to see if that's someone that you can match well with and that you feel comfortable trusting with your finances, not just someone that's going to sell you a whole bunch of products. So do your homework and also be assured that you're not tied to any specific financial planner. You, at the end of the day, can choose who you want to work with. When it comes to choosing a financial planner, in my opinion, you should choose someone that educates and not just advises. They should help understand your money and not overwhelm you with jargon, teaching you to make better decisions and allowing you to always feel in control. My point when it comes to like working with clients is like, I always feel that good quality planners, if they can educate and teach you more so that they build your foundation when it comes to finances, it actually helps them. It makes our job easier in the sense that we've built that layer and now we don't have to re-explain a lot of terms before. So a quality financial planner will always focus on educating you so that at the end of the day, you shouldn't feel forced by the planner to make any decision. You should feel empowered. And then the planner should be able to like say, I'll step back. I've given you the pros and cons of each of your decisions or your current decision now regarding your money and what you want to do, the dream and life you want to build. Now you can make an informed decision of what, process or what way forward you want to proceed. And then always feel welcome to ask me further questions, So that's the type of relationship or education relationship you should have when you're finding or looking for a right planner. Another thing that I've also mentioned is that look for a trustworthy advisor. A trustworthy advisor will not say they are trustworthy, but will rather show that they are trustworthy by being open about their fees and what you can expect working with them. You should know exactly what you're paying for and why, and whether you're paying for the advisor services through commission on products, invoice fees, or a combination of both. There's so many options out there, and a lot of planners now are very flexible in tailoring their advice or financial plan for any client to also make sure that it's affordable and it also works within your budget. They should also provide you then with a clear roadmap of like, okay, Mr. Financial Advisor or Planner, what is it going to look like me partnering up with you, and what can I expect and for the next 12 months and also going forward? And how can you help me achieve my goals while making me feel comfortable talking about my money openly? That's the questions you should be able to ask, and for you to determine if the financial planner you're working with or you're reviewing, considering working with, is a trustworthy advisor that can help you build the life you want. Like I also said, a financial planner should be like a GPS. They're clear about where you're going and how much the journey costs. And no advisor that you deal with should be, untransparent or not willing to disclose the fees, because I always say to clients, it's funny how we know how much we pay for a cup of coffee, we know how much a Big Mac or McDonald's costs, or how much our Netflix subscription costs. But no one generally asks more than enough of like, okay, to take you on as a financial advisor or planner for my finances, how do you charge? How much is it? And, can you fit within my budget or can we work together? So I always say that look for a trustworthy advisor that's open about fees and what it's like working with him. So just in closing, I know it's been quite quick, but taking feedback from the last sessions that we've had this week with the Global Money Week, I feel that the questions or the Q&A at the end will add more value to a lot of you. But the last slide I have is taking control of your financial future now. Financial success is built, it's not given. So make intentional money choices, have a clear financial plan that aligns with the lifestyle goals, build your financial confidence through education and trusted advice with the right planner. The right planner, when you look for the right person, always empowers you, does not sell you. Not all financial professionals are the same. Do your homework, find the right financial planner that fits you. It sounds funny and ironic, but it's almost like a marriage. You want to make sure you partnered with the right person that gets you. And trust me, there's a planner out there for every person in South Africa. So start, and then the next point would be start where you are now. No step is too small. There's more focus, or I would say it's more valuable to focus on the small, consistent actions, which then would lead to big long-term wins. And avoid the whole mindset of like, oh, one day when I earn more, then I'll go and seek out financial planning and proper advice. Avoid that mindset, because wealth and financial freedom is built through habits, not just income increases. So I would say to clients, the actual most important time you should start seeking financial plan advice is like the moment you get your first job, because the common mistake or the common thing that I find that overwhelms a lot of us is like, you get your first job, you get paid, you find you get whacked with this large amount of tax by SARS, and then you don't know how to read your payslip. So getting your first job and getting your first paycheck, that should be a important point of like, okay, I need to seek out a financial planner now to give me advice and guidance of how do I manage my money better now going forward, as I grow through my life as well. Every smart financial decision today is also an investment in your future peace of mind, security, and freedom. And just know that small movements or awareness now, small habits, that make a huge difference. And your future self 10 years from now will be thanking you. And just one thing I wanted to also add on to that is that we're so used to, I'm finding this with clients as well, we're so used to comparing our financial journey and plan with our friends and family. But we realize when we comparing our year one with someone that's on their year 10, year 20. Yeah. So never compare yourself to friends, family, and other peers in terms of their financial journey. Rather compare to yourself. So I always say to clients, compare yourself now to yourself a year ago, and you will be so proud about the experience and the progress you've made. And that's a better measuring tool than comparing yourself to others. At the end of the day, you are the CEO of your own life and decisions. So I would say you have the power to actually decide like what decisions do I make now that's going to benefit me in the future. All right. Sorry, that's quite quick. That's pretty much my presentation. But yeah, I'm here to also answer any questions and thoughts or anything that's on your guys' mind. Like I said, I didn't want to make my PowerPoint presentation too long because I heard the feedback from previous Global Money Talks was that people don't want to have a long PowerPoint presentation. So yes, Rihanna.
Russell, thank you so much. And I was trying to get some questions of my own, and just as I think I've got the question, then you answer it. So it was really a comprehensive presentation and very insightful. I've got a question that I'll start with, and everybody else online, if you could post your questions in the chat, then Russell can address those. You've been referring a lot to 12 months. What
Yes.
is the significance of this 12 months? Am I only going to see this financial professional every 12 months?
Yeah, so the 12 months actually that comes from, I'll be honest, that comes from my team's own process actually, because what we've been finding with a lot of clients, and it's bittersweet, I'll be honest, is that, like I said, there has been a lot of bad advice, but there is good advice out there. And the common trait we find with a lot of clients is like, well, I'm signing up with a financial planner. I don't know what to expect. I don't know what is my first couple of months going to look at, how are we going to measure if we're making progress, whether it's in not just the financial measurements, but also like in terms of like how I feel about money. So I think just to answer your question, firstly, a relationship with a financial plan is not 12 months. It should be almost for life or a lifelong journey. A lot of our clients, we've walked with them all the way from when they just started working to now they're married with kids and they own their first house. So they've gone through a lot in their life. But why I always say the first 12 months is generally important is that it should give you assurance of like, okay, if you deal with a financial planner, what are we going to do now within the first 3 months? How are you going to help me? Aside from, I don't want to just hear like what products you're going to tell me, but how are we going to make progress in terms of my financial plans, my goals, and so forth. So we use 12 months as a good benchmark of like to our clients of like, try us out for 12 months, see how you like. And at the end of 12 months, because we see our clients as stakeholders, tell us what you like, what you would like more of, where did we drop the ball, where did we not perform well, and what would you like more in the partnership going forward? Because we're working as a team, I always like to also say to clients, we're paddling in your boat of life, and I can't paddle by myself. Hours I'll be going in circles, So within those 12 months, we always say it's very important because the first 3 months, the financial planner that you deal with should be addressing all your immediate needs. We like to use a lot of medical analogies. I always like to say, like, they should be addressing all the immediate financial pain points and worries that are stressing you out at night, keeping you up awake, the bleeding wounds, the symptoms, right? And then the next 6 to 9 months, they should start addressing the causes of those financial wounds, as you would call it. And we also phrase that as like, now we've addressed all your immediate needs in those first 3 months. The next 6 to 9 months, you should be tending to building my foundation. And then after that full year, you should have a good experience of like, okay, what it's like working with a financial planner. But yeah, coming back to your question, first 12 months is very important because as a client and a consumer of like, okay, what are we going to be doing with you, Mr. Planner, for the 12 months and thereafter?
Right. So if I can summarize, the 12 months that you refer to, that is almost your trial period. You put the plans in place, and after the 12 months, you start reviewing to make sure that you've met the client's needs and you're on track to meet the goals.
Yes, 100%.
But am I correct in saying that if I'm your client and in month 4, I have got a burning question, something has changed, then it's an open relationship where I can come back to you and say, Russell, things have changed in my life. We need to revisit what we've been planning for, or there's something that I'm not sure about. So it's an open relationship where I've always got access to my financial professional to make sure that I understand what is happening in my plan and to make sure that we reach the goals that we agreed on.
Yes, 100%. I think just added onto your point there as well. I kind of like thing that irks me within the profession is like a lot of clients, the only experience they have with the planner when they do see the plan is like they've seen the planner for the first 1, 2, maybe 3 meetings if they're lucky. They implement the products, and then, like you mentioned earlier, they experience like I see my planner or advisor once a year and he just goes through my policy statement, which is to me, it's pointless, it's useless, especially with technology now. You can just log on to your profile online. You can check your policies yourself. You don't need to see a planner to do that. A planner should, within those next few months as well, they should have a structured plan of like, these are all our points of engagement. And these are all our meetings, or as like what we like to phrase it as like, these are our coaching sessions going forward. You know, it should be a more open relationship. And I fully agree with you as well. That's also how our relationship is with our clients. And it also should be with your planner that you choose to work with as well. It's like, you should not be afraid to call or WhatsApp or email them. That's what the planner is supposed to be there as well, is they add so much value because you start finding that as you become more aware about your finances, and a big thing is that we tend to underestimate how much our finances are linked to our lives and the lives we want to build, that you end up calling your planner for a lot of life decisions that, believe it or not, it's trickled down to your finances. So I always joke with my clients and say that a lot of our meetings are probably 80% or 70% is about your life, and then 30% is about your financial side. Yeah. But yes, I think to answer your question, you should always have access to your financial planner. You should never feel intimidated or embarrassed of like, oh, I can't call them or I can't email, contact them. If you can't speak to your financial planner, it's not the right financial planner for you. You know, because if you can't speak to your financial planner, how are you guys going to work together to build like the life and get your finances in order? Yeah.
Excellent. Thank you, Russell. So I've got a question here.
Sure.
My question is, should I definitely obtain my financial planning qualification if I'm interested in becoming a financial planner, or should I rather get a mentor first to see if it would be the right fit for me? I know that to help people with financial wellness, but I never wanted to be the salespeople you had mentioned, as that was my previous experience with my financial professional.
Oof. Firstly, to whoever asked that question, I'm so sorry you had that experience. It's unfortunately very common, but like I think firstly, just on the I'll break it down because there's a few parts to your question. But firstly, just on the sales professional experience you had. Yeah, it's unfortunate you had a sales experience. You shouldn't have gone through it. And I would say like if you do have plans or, thoughts about, obviously working as a financial advisor or planner. And that's also how I saw it when I started out in profession. Mind you, I came out of RC, I got the degree, I followed everything to the T on the book. And you know how discouraging it was for me when I found out that a lot of advisors that were in the field were more policy salesmen than advice givers. It made me think like, what is the point of me studying if there's people here that are bringing the profession down, But then another way you could say it is like, and that's how I saw it, is that the expectation bar of financial advice or planning is so low. So it doesn't mean you have to conform to the general standard or the expectation. You can become the difference or the different experience of what people don't expect. And that's how we've been able to grow in as well. It's like I use that to my advantage of like, okay, clients know what to expect when they think about advisor. They haven't worked with me or met me. So I'm going to give them an experience that's completely different. And we don't talk any product in the first 3 or 4 meetings. We actually just talk more about the client and themselves and how they grew up when it came to money. So you can be the different person or the 1% difference compared to the 99% salesperson if you want to consider going to financial advice or planning. Then to answer your other part of your question about, whether you should go study financial planning or seek a mentor, I would say, and this is something I wish I knew back in varsity, LinkedIn is your best source, and obviously do it with courtesy and professionalism as well. But there's a lot of planners, well-established planners you can look out for and contact directly on LinkedIn. It's like Facebook, but professional. And the nice thing I love about it is that you can access people that you generally would not have access to, without technology. So you can contact reputable, well-established financial planners, and a lot of them be more than happy to like have a quick, 30 to 45 minute, maybe even an hour, virtual MS Teams call with you about like what it's like working in financial planning, what is the differences, what are the challenges, what can you expect? And I can assure you a lot of the good planners I know now that are in my circle that I work with and lifestyle financial planners, none of us push or sell products. A lot of our offering is very advice given. We even have clients that pay us on a monthly just for advice and guidance. So you don't have to conform to being the product or policy salesman. So I would definitely say if you want to first gauge whether it's the right, career route for you, speak to a lot of financial planners. A lot of them, are more than open to talk to you. I can drop some names now within my circle, but like a few well-known planners I know that are really big advocates for profit advice, like Dirk Groenewald of Client Care. You've got Brian Nicol of Freedom Financial Planning, Terence Tobin Richard Diaz, who's very popular, Mel Jacoby, Louis von der Merwe. There's good planners in every province. So don't be afraid to reach out to them and say, look, I'm looking at this, pursuing this career. Do you mind if I just, schedule a call with you to find out a little bit more before you decide on making that future investment in, studying financial planning further? You could even reach out to me if you want to.
Thank you, Russell. And Sipiwe, if I can add to Russell's comment, there is be part of the change.
Yeah.
So be part of the financial professionals that give advice and not sell you a product. So let's have a
100%.
look. There's another question. And this is from Monique, and she says, a question to Russell. With being in the industry for more than 10 years, can you explain to younger planners how to deal with client retention, dealing with the more difficult clients?
True. Okay. So just like in every profession or every type of line of work, you will get like difficult clients. And I think the first step is, and it sounds difficult, but it comes with also when you work as a financial advisor or planner, is that if you're really serving and helping the client, try and understand them and don't get personal, don't get emotionally triggered or emotionally involved, we always do this as well. We try and understand where the client's coming from. And my mentality since day one has always been like, was whatever we do, if I was in the client's shoes, how would I find this? So I try and adopt that philosophy also within my team and our company, where we think from the client's perspective, not from a financial advisor's perspective, So try and understand your client. And I would say before letting it escalate, try and have an open discussion with the client. Remember, you have that existing relationship with them. So before jumping to conclusions, try and have that discussion with them. Like, okay, what's bothering you? What is upsetting you? What did you think, did I do wrong? How can we solve and put this to ease? And how can I actually get us back to like first base where we're good now? So try and understand the client, then getting triggered. And I would say eventually, like at worst case scenario, look, we have experience as well where sometimes you do get clients that, and it's not technically you've done anything bad, but say for instance, it's a conflict of personalities or like, conflict of advice, or there's no commitment, then it's also normal to also have that open discussion of like, is it still good for both our interests to work together? And I think that's another thing, both you as the client, but also the planner, your chemistry and your fit is so important, because if you guys don't match online, there's also nothing wrong and there's no financial cost for doing so. You can decide to part ways, peacefully part ways, if it's not working for you, because the longer you stay, you're just kind of wasting more time, but you're also like doing more harm to each other in that relationship. So, it comes down, it's a relationship. You also have to be open as well.
And if I can add to that, Russell, I think that is why, certainly from an FPI consumer education perspective, what we say to consumers is, if you're looking for a financial professional, don't just use the first person that you come across.
Yeah.
Speak to a couple of people and make sure that that personality fit is there and you are able to work with this person. So there's that connection before you actually, take the next step to say, well, we're going to be working together. And I think it's also very important to know and to realize that if for some reason you can't work together, it is okay, both from a financial planner's perspective as well as a client's perspective, to say, this is not working, let's rather part ways, and like you say, not do any further damage to the relationship.
Yeah, 100%. I think also that leads to that initial point we spoke about earlier of why take your time looking for a good planner, because then most likely you want to find someone that fits you for life or for most of your life. So I always say to clients, like the first, or for general people that want to ask, is like first good starting point. And like you mentioned, Rihanna, it's like, you might hear recommendations by your family or friends that might refer you to their financial advisor and planner. And yeah, they most likely might be great, but they might not be great for you. You know, they might be great for your family and friends, but they might not match you. So if you're starting from a fresh, clean slate, I would say the first step that I say to every person is go to the Financial Planning Institute South Africa's website, go under the FPI 123 Money tab, and search for a financial planner in your region. It's very quick, especially with technology. Look up top 5 planners you like, then look them up on LinkedIn. You will see the nice thing also with LinkedIn, you can see a bit of their personality and what they talk and post about, especially if they're active. Yeah. So you can see what type of planner they are. And then most likely a lot of them offer complimentary meetings. So book a call with maybe your top 5 planners and just to have a meet and greet, see if they match your philosophy. Are they transparent? Do they share the same values? Do they get you? Do they understand you? And most importantly, do you feel comfortable with them? Because you don't want to get someone that's got all the right credentials on paper. But then when you meet with them, it's like they're a robot or like you can't connect. Then it's that connection issue is going to cause problems down the line, no matter how qualified they are, you know? And you want to also find someone that you can talk to and feel at ease of like they value your input. Because I always say to clients, like, also when you find a right planner, it shouldn't be a relationship of the planner telling you what to do, but it should be more of a planner coaching and guiding you, and then you make the decision going forward. Otherwise, at the end of the day, we always say to clients, like, then you helping build the planner's plan. You're not building your plan at the end of the day, you know?
No, that's quite true, Russell, and I've had first-hand experience. I think my financial planner is great. So I recommended him to my daughter. She came back to me and said, this person I cannot work with. And yet I think he's great. So, you know, that is how wonderful it is that for some people, you know, the planner works, for other people they don't. And there's other financial professionals out there that will work for you as an individual.
Yes.
So let's go on to the next question we have here. And it says, what are some beginner-friendly investment options for long-term wealth building if a client wants to start saving but does not earn a lot?
Okay. So you want to start saving, but you don't earn a lot. So firstly, I think the common mistake that a lot of us make, and I made it too before I got into the financial planning profession, is like first understanding the difference between saving and investing. When you save money, it's really for a short term. It's less than a year. That's when you put money in a fixed interest deposit account or a money market. And again, also let me just put this disclaimer, I'm not giving advice here. But like we make the mistake of putting money into those accounts and we think we are actually investing, and then we don't get, you know, the type of growth or return we expected because we're comparing to like shares or what we see on social media. So you need to first decipher, okay, what am I saving or am I investing, right? That's the first thing. Secondly, the important point there is, and I always say this to a lot of our clients as well, you need to be intent and purposeful behind, okay, what am I saving or investing for? Because I've experienced this myself, is both in my personal experience for my own saving when I started out saving or investing money, and I made the mistake of putting my money into a interest account and I thought I was investing and I got like $300 back. Wasn't much. But then also in addition to that, I found that not only for me, but when I was early in my career and dealing with clients, if you don't have a deeper intent or purpose behind like why you putting your money away in this investment account or the savings, chances are you're not going to stick consistently to it. You know, we always ask clients, you know, young clients come to us and say, I want to invest for wealth. Okay, what is wealth? Okay, I need R1 million. Okay, if I give you that R1 million today, well, how does it change your life? You know, so, and it gets deeper and deeper to like, okay, you know what? Actually, I have financial anxiety or stress that I might not have a job in 3 months' time, or I've grown up and I've seen my parents struggle where money was a big problem, and I'm worried about not having enough money for food on the table, things like that. So once you get to the deeper purpose meaning, it not only gives you so much more motivation for sticking to the plan, but when you invest every month, you know mentally how that is benefiting or transitioning into your life. I'm doing this for this peace of mind or this feeling that I'm getting out of it. So just coming back to the short question now, you need to first establish that. And if it's for a shorter term, I would say, like if you're looking at 1 year or less, I wouldn't invest in anything with related to shares because it can go up and down. And also, if you put in like whatever you have left, and especially if you're not earning a lot, and that's like your all the savings you have, you're going to have an emotional roller coaster with what's happening in the share or investment market, you know. So if it's more for the longer term and it's not much, I would say what you should start out. And if you're a newbie investor, and again, this isn't advice, I would say look at what good interest account investments you have access to through your bank, you know, that offers a good interest rate. And first, just build the habit of putting money aside. You know, once you've done that for a year, and it's like for a deeper purpose of like, I want to cover 1 month's worth of my salary, and then 2 months and 3 months, and you break it up into smaller milestones, you not only find that, oh, this financial planning stuff is doable, it's achievable, you know, someone like me can do it, but then it gives you more momentum of like, okay, now I've gotten a good understanding of that. Now I can always move some of the money into a longer term investment. Like if I want to invest in a unit trust for shares or something like that, I can do that. But then at that point, I would also say seek out advice for that, because you want to get the education around it. And also from an investment point of view, I would say if I was a client, it's so nice having someone to talk to when there's a lot of noise and movement in the markets and you think the world's falling, and having that person to show you, look, everything's still okay. That's probably the biggest value I can say if I was a client that I would get out of a good financial planner. So when you get to that point, then seek out a financial planner. Yeah.
Thank you, Russell. I think you've answered that very well. We've got a comment there from a lady, Namarasha Singh from the CISA Foundation. Thank you so much for that. I think, Russell, the important thing for people to know is that there are good financial professionals out there. You just need to find them. You need to have that conversation, and you need to make sure that you can work with this person. The other thing to remember is that if the relationship gets to a point where it's not working, you are able to change that. But don't go without a financial professional, because they can add valuable insights and support. And especially, like you've said, all the noise in the market, you need somebody to just keep you on the right track. Is there any other questions that we can address? I haven't seen any. Anybody still wants to post a question, please do so.
I see some questions in the Q&A. I don't know, Rihanna, if you can see that. One from Nakesh and one from Denise.
Let's see what's in the Q&A.
Okay. Nikesh.
Is there some billing guidelines? And that's from Nikesh.
Okay. I'll share this now as well. Okay, so billing guidelines, and this probably goes into like how advisors earn. So we do this with every client, but I'll just give you some broad outlook. So advisors can earn in like a number of ways. Most common way that a lot of advisors earn is they earn off commission. That's basically bought into the product. It's usually with insurance-based products like life insurance, risk cover, and so forth. So for example, if you're paying 300 Rand a month for life cover, they're most likely getting paid 3,000 Rand commission from the insurance company that they've placed your risk cover with. Most advisors work that way. You don't pay that directly. It does come from the insurance provider, but it is built into your monthly premium. So in a sense, you are indirectly paying the advisor for that. When it comes to, that's for risk insurance in most cases, and sometimes retirement or investment products, which in my opinion, stay away from insurance-based investments because the fees are really expensive for you as a client. When it comes to investments, I would say if it's low cost investments that the plan is using, and again, product based, it would be bought into either they can charge an upfront fee up to 3% upfront of what you invest in, so they can get a percentage of what you invest in. They can charge a monthly amount, which is a monthly percentage of what you pay in per month, or the common one is like an annual advice fee, which is usually capped at 1% with VAT. That's 1% of the total value of your investment. So that's how some advisors charge. Short-term insurance and medical aid, they get paid monthly from the providers. And then that's mainly the main ways on which advisors earn. Then you get some advisors that charge on a fee-based plan, monthly retainer, or they charge it once or per project. They would each have their own billing or costing for that. And most of them don't then charge commission or fees on the product. So you get it at cost price. So it's cheaper then for you if you implement any financial products. Some planners do a combination of both, depending on their model. And then when it comes to, so those are the different ways advisors and planners can charge. And then if it comes to like billing guidelines, I would say you don't have to accept the first offer from the advisor. So going back to initial point, always seek out more than one advisor to kind of compare. But each advisor, if they're charging on a billing rate, meaning no commissions and it's a fee-based plan, they would generally have certain categories depending on your financial complexity, meaning how complex your finances are, but also in terms of your life complexity. Like if it's just you, or if it's your family, or if there's a business or trust, they would offer set rates per that, based on financial and life phase complexity. So each advisor in that section I've seen it, they can charge differently. So yeah, I can't really give you exact billing rate, but I would say that's how most advisors are basing their fees, is on financial and life phase complexity of the client. And I would also suggest, like I said earlier, you don't have to accept the first offer proposal from an advisor. If you find 5 good advisors, have a meet and greet consult, and most of them do it complimentary. Have a meet and greet consult with each of them, and then you can compare and decide, okay, which one do you fit well with and which one can you afford?
Excellent. Okay. The other one is just Denise saying, how can we get in touch with Russell? If you want to answer that one.
I mean, yeah, you're more than welcome to contact us if you need advice. I mean, I don't know if you can put my details in the chat, but yeah, you can either contact me on my work line, which is 060-619-3147, or you can email me on Russell, russell@sfpadvice.co.za if you need advice, yeah. Or that's also extended open to anyone that wants to just have a once-off consult, or someone that wants to find out about the financial advice profession. You're more welcome to reach out.
Excellent. Russell, we've still got a couple of minutes. I'm going to ask you, what questions should a consumer ask a financial planner in that initial consultation? I mean, I don't know what to ask. I mean, I'm looking for a financial professional, but what type of questions should I ask to make sure that I can work with this person, or the person that I'm looking at has got the qualifications and the expertise that I as a consumer need?
Okay, so yeah, obviously each planner and each person is different, but obviously the first thing I would ask is, what is your advice process like? If I start with you today, Mr. Planner or Mrs. Planner, so and so, how would our first steps look like? These are my pain points or my stresses that worry me, my financial worries. How would my first 3 months look like? What would we be doing aside from just meeting? What actions will we take? I don't need to know the full detail, but I want to know a scope of like what the first 3 months are going to look like. And thereafter, what's the next 6 to 9 months? Thereafter, I would also ask of like, okay, post building my foundation, or level 1, as I like to call it, what is our partnership going to look like year after year? When do I come and see you? What are your expectations of me and these are my expectations, but what are your expectations of me as a client? Because I think that's also something that doesn't get covered, is what do both parties want from each other? Because remember, you entering in a collaborative partnership with this person. It's not a dictatorship where like you sign with a planner and you just follow what they do. It needs to be a collaborative, open partnership. Secondly, what I would also ask is, what do you do, or how do you handle clients in my current life phase, which is very important, because you could be seeing a planner that specializes in seeing retirees and you're a young professional. They might not have much experience, not qualifications or expertise, but experience advising you where you are on your life phase. So say like, how would your advice model or how would your advice process change for me? Yeah. Thirdly, would be also, and this can vary. I know it's kind of like a discussion or debate within our profession, but you could also ask the advisor, like, are you completely independent, or are you tied to a specific provider? In our profession, we get tied financial planners or tied advisors, which are like, your Old Mutual advisors, your Sanlam advisors, your Discovery advisors. And then you also get your completely independent financial planners or advisors, similar to us for most of the other advisors, where like we're not tied to any company. We have contracts with them, but we work with our client interest mind. So both advisors or planners can best serve the client, but you just want to know like what are their limitations in terms of if you're seeking out product implementation, what is their limitations in terms of what they can implement. So you just want to know like, okay, what are your limitations or restrictions? And then what I think is very important that I think is like controversial that people don't ask enough is like ask what, how are you incentivized to give advice, basically? A thing that's kind of controversial in our profession, but it needs to be spoken about more is that a lot of the bad experience with policy salesmen comes from advisors that are incentivized by sales targets. So there has been cases in most situations where those advisors will rather recommend products that are more commission-based, but not technically in your interests because they need to make sales targets and also for their commission targets. So you want to be open, ask them like, okay, how are you incentivized? Do you have sales targets? At least be open with me so I know what I'm getting into if I sign up with you. And then most importantly, like I would ask like, okay, how do you charge? How do you earn your money? Because I think another misleading thing that I've seen a lot in the profession is like a lot of consumers or clients think advice is free. And I would say like that's due to years and past years of like really bad advice where no advisors or the policy salesman would not tell a client or disclose to them, this is how much I'm earning. I'm just getting it off the product. And then what happens then is that they end up finding that news later on when another advisor does a review of their portfolio and they're like, oh, do you know you're paying so much in fees? And then they feel completely blindsided. So I would always rather say, if I'm the client, I would say to Mr. Advisor or Mrs. Advisor, please be upfront with me. Tell me how you earn. If you're charging me through the product and you get it and pay from the provider, does it affect me? But at least let me know so I know what is the cost. Because one thing I think that's very misleading, no financial advice is free. The advisor is earning some way or another. And also generally, it's not to say you want to look for the cheapest advisor, because I think in my personal experience as well, cheap is not always the best. Remember, by seeking out the cheap advisor or asking for discounts as well, that also means the value that advisor plan is providing to you is probably not that great. So you want to look for quality and a reasonable fee, charged by the client and by the advisor, sorry, and see if it fits within your affordability, budget, and cash flow.
Russell, don't you think it's also important for the client to know or to ask the question, are you registered with the FSCA? Because isn't that a fact that all financial advisors or financial professionals has to be licensed with the Financial Sector Conduct Authority? And then as well, your qualification. Is it important to know that in your case, you've done your postgrad financial planning so that it gives me peace of mind that the person I'm dealing with is knowledgeable?
Yes, definitely 100%. And I would say that's also why I recommend like your first point of call before you look for a financial planner, aside from obviously getting referred by family or friends to a financial advisor, is go and check on the FPI website, because all of those advisors and planners are credited and recognized and registered with the Financial Planning Institute, and most likely as well, in those cases as well, their practices and themselves are registered with the FSCA, which is, for layman terms, Financial Sector Conduct Authority. It's just this big organization that regulates advice and financial advice practices so that there's no fraud or bad advice given. So I would say, yeah, 100%. Check if they are qualified. Start with the FPI site and search for your planner. And then also, yeah, it's important to ask them what are their credentials or qualifications, because a good thing as well is, I fully agree with you, Rihanna, is like your planner is there for you for life, right? So you also want to know, and it will affect your finances and the advice they give you in some way or another. Aside from experience, you want to know if they are also passionate about continuous professional development, but for themselves. Because and it's part of the FPI's mission as well, it's FPI advocates for continuous growth as well, because as the industry changes, the financial advice industry changes, we as professionals need to also make sure that we are upskilling to continue to give advice that's fit for the client. So you definitely want to make sure that check what their qualifications are, and further to that, ask them like, okay, what are you doing to continuously upskill your ability to give advice? Because I want to make sure I'm getting advice in 2025. I don't want to be getting financial advice from the 90s. I want to make sure I'm getting the current advice with all the changes that's happening, you know? So you want to make sure they're current, and they also have plans of always like upskilling so that you will always get the right advice going forward in your life. Make sure they're qualified, and also that they are accredited with the FBI and the FSCA, and they have the right qualifications. I always look for BCom financial planning, postgrad of some sort, and I would say personally, CFP is like the gold standard, you know, in our profession. So for intricate, some people might see it as a title, but when you go through it as a professional yourself, we cover everything basically and on a holistic level. And it's everything from an advice perspective, not a product perspective. So you are definitely in most cases in good hands if you are dealing with a CFP or certified financial planner professional. So definitely make sure they are qualified. And then another thing I forgot to mention, when you look up planners, don't be afraid to Google them. You know, if they have a social media presence or they have a website, or they will come up linked to the FBI and FSCA, you can actually see like what type of person they are, all their qualifications, are they accredited. Don't be afraid to Google them. And at the same time, you could also see what other reviews or testimonials other clients are having about them.
Russell, thank you. And we are at the end of our presentation. I think we're all more comfortable in dealing with a financial professional, and we will be able to source somebody that we can work with and that is going to have our best interests at heart. So thank you for your time. Thank you for everybody online for joining us. We appreciate it. Thank you. Have a lovely day. Take care.
Thank you, everyone.
Bye-bye.
Have a lovely